Welcome to the podcast. My name is Farah. I'm going to be asking Adam, a tax law specialist here at Specialist Law, some questions about the objection process and how to successfully fill an objection letter out.
Hi Farah.
Hi Adam. So, at what point do you usually need to lodge an objection?
Usually it's after you've lodged your own tax return and the tax office has reviewed it or audited it, and then they've disagreed with what you've done, and so they've given you what's called an amended assessment or a default assessment, which says this is what we think the tax actually should be, and if you don't like that number, that's the point at which you'll lodge an objection.
Okay, so if you're at that stage, what would be your first step?
So the first thing I do is I go to the ATO website. They have the objection form on there. You can fill that in with most of the details, and we'll probably put a link on our website somewhere if we can. There's a section in that form, section 9A. It asks for the grounds of objection. That's the most important part. And what we'd suggest you do is actually attach a separate document to fill that out, just because there's usually not enough space in there.
And how do you think it should be set out?
I think the first step is to work out what you think the tax should be or the position should be, and then after you've done that, you'll have to explain why that's right.
And what should you include in it?
So what you do there is you'd say, okay, this is what my tax is or what it should be. These are the sections in the law that come to that conclusion and support that conclusion. And the law might say, well, for example, if it's a repair or something, it might say, well, it needs to be returning the item to its original use. And so you'll say, here's a section about repairs, and what I did returns the item to its original use. So, and on that basis, it's a repair, and I should be able to claim a tax deduction on that basis.
So you're ticking off the elements in the legislation. Is it as easy as that?
Yeah, usually it is a big picture. I think the only thing you need to be careful of is overlapping provisions. For example, you might read through the law and it says for something that could be a capital gain that it's taxed in a certain way, but capital gains tax has its own provisions in parts 3-1 and 3-3, which are different and might apply instead. And so you have to identify which part of the tax law applies, and you'll find as well that there are some what are called tiebreaker provisions, and what they do is they say, well, if it looks like I fit within this section and this other section, then which of the two sections do I use? And you'll need to identify the right part, basically.
Yeah. And in doing that and the rest and filling out the rest of the form, what level of detail do you think someone should include?
I think you have to put in what's necessary to support your tax position. And so what you'll do is you will say, okay, using the repair example, I think that this was a repair and it's deductible and this is why, and here's the supporting evidence to show that, basically, so that the person at the ATO can look at that and say, yep, I see that everything is met here. But having said that, also be wary of the overlapping provisions, because you might have something that looks like a repair, but they might say, well, that's part of cost base, which is a CGT issue. So you might want to have a look quickly at the cost base rules just to make sure it's not something that adds to cost base. And then you can say, well, it doesn't belong in CGT, it belongs in repair, and so it's deductible.
Okay, and in making those submissions, what supporting documents should someone attach?
I think that's a case-by-case basis situation. I think the best thing you can do is start off where the audit left off, because they will have acknowledged and agreed certain things. Like, let's say you've got an asset that you're claiming depreciation from. You might say, the auditor might have said, well, you don't own the asset at all. And if that's the case, then you need to give an invoice or whatever it is to show that you really do own it. Or they might say you do own it, but it's not depreciable at that rate because it's something else. Because different things have different rates of depreciation, and then you'd need to say, well, it's really the thing that depreciates at the rate that I'm saying it depreciates at.
Yeah. And do you have to include everything all at once in that first letter?
I think you need to have your grounds at least. I mean, you can always add to the grounds during the course of the objection, but I would always recommend having all your grounds in there first. In terms of the supporting documents, I like to adopt a collaborative approach with the tax office there, because obviously you can give them every single invoice that you've got, and that could be a whole lot of work. But I think, it's good to provide them what's necessary and then reach out to them and say, is there anything else that you might need, and then get that so it's a bit more targeted.
Yeah. And this collaborative approach, this back and forth, how long does that usually last?
Well, I think if you're doing an objection, you should probably allow, and it's going to sound bad when I say this, but allow 1 to 2 years. And the reason why, it's not because you're furiously working for a year or two. It's just when you put an objection in, it might be 1 or 2 months before someone even gets allocated the file. Then they have to get familiar with it. Then they'll send you some questions. Then they'll give you time to do that. They might give you a month or something to get that together. You might need 2 months. You send it to them. They have to spend time looking at it. Then they give you feedback. Before you know it, it's already been 6 months. And so it can take a while, but it's not, active, the entire time.
Yeah. And following this process, what do you think the likelihood of success is?
I think obviously it depends on the strength of your case, but it also depends on your approach. I think one of the things I've observed over the years is people tend to do the exact same thing in the objection as they did in the audit. But if you do that, the chances are you'll get the exact same result. The only time it would be different is if the auditor made a genuine mistake. And the chances of that are not always that high because the ATO has a pretty thorough review process internally before they finalise a decision. And so, you really want to be going, okay, how can I prove what I need to prove? And I wouldn't necessarily do it the same way. So I think if you can take on board the concerns and you can stick to the issues and prove them, you have a much higher chance of success than if you sort of, do the same thing as you did in the audit.
And the form also mentions penalties and interests. Can you also get that reduced?
Yeah, the penalties and interests usually follow the tax because they're a percentage of the tax bill. So if you get the tax bill reduced, the penalties automatically reduce, and so does the interest. The other component of that is essentially some measure of culpability of the taxpayer at the time they lodge their return and their behaviour at the time. And you probably want to address those types of issues too to see if you can get the penalty down further.
And at what point do you think someone should seek, outside help, like through a tax agent or legal advice?
I think the best time is obviously the best time is at the start if you can, because there's less stuff sent to the tax office that might, just confuse the whole matter. Because sending irrelevant information, it creates a negative impression sometimes, but it also just creates a lot of confusion, which then needs to be worked through. So I would say that. But the other time, if you did want to have a go at it, is if you find that you're sort of going in circles. You're talking to the tax office and nothing's happening, and it's going round and round and round, and you're not making any progress. And then it's sometimes good to get someone else involved who can sort of break that circuit and figure out, where it's going wrong and what needs to be addressed.
Yeah, and what can we offer over here if someone needs that help?
Well, we've got the sample of an objection for repairs, say, that you can sort of see and have a look at. That's free. and get just a general sense of how to do these. And then we've got a lot of templates on very specific issues too, income tax, GST, penalties, and different parts of each of those as well, which are on the site that are available for anyone if they want to just go ahead and get those and use them. If you do end up getting one of those, they do come with a 15-minute free consult on filling it out, which we can give some strategic advice at that time as well, just to help out. Alternatively, we do run a lot of these matters as well, so if someone does need it, we can always step in and help out.
Okay, awesome. Thanks for your time, Adam. I hope that's been helpful to our listeners.
Thank you, anytime. If you do want to get in touch with us, our phone number is 02 7200 8200. That's 02 7200 8200. And if someone, Nancy will probably pick up and just let her know that you heard on the podcast, and so that's the reason you're calling.